Welcome back to Market Day Report. I'm Tony St. James. We're working our way towards 10 o'clock Central Time, kind of the mid part of our trading day. And already the Dow is up 483, NASDAQ trading 275 higher, the S&P 77 higher, and crude trading 35 higher. Kind of sets the stage as we roll into the commodities. And let's look at corn first. We are lower. September off a half penny, 382 3/4. December trades just a tick above $4, but it's a half penny lower on the session and 1 cent off of the day's low. What about soybeans? We got a kind of a mixed bag from our export sales numbers. August is down 9, 10, 11 1/4. November at 10.10, it's off 8 3/4 as all contracts trade in the red. Interesting to note, though, soybean oil is moving higher. Exports and sales were both good from USDA. To the wheat market, down 3 3/4 on September, 534.5, and December at 559 1/4. It's down 2 3/4 cents. Hard red winter wheat is 6 lower on September at 549.5, just 2 ticks off the day's low. D's down 5.5 at 566 3/4. In Minneapolis, spring wheat is 2 lower on September at 583 3/4, within a penny of the day's low. D's, March, May, July, they're all lower. And the cotton market in New York, I think you'd be surprised if I said it was higher, so I won't surprise you. December at 67.53, it's down 20. But surprise, we can go to St. Louis and find Ted Seifried. Ted's with Zaner Ag Hedge, and we've had an interesting week. Ted, would you agree with that?
Yeah, Tony. I mean, it's been interesting mainly from the outside market perspective. Obviously, last Friday we were super heavy in the equities. We followed up with that in a very, very big way Sunday night into Monday. But then the last couple of days have been defined by an attempt at a bounce. Yesterday, we were higher in stocks at this time, but by the end of the day, we had given back a lot of those gains. We're trying to take those gains back again today. And that's really not giving us any reason to see a whole bunch of risk off, i.e. fund short covering happening in the grains markets. So you're just kind of drifting lower. I'm going to say there's not a whole lot of grains news, right? I mean, we're just kind of watching macroeconomic, domestic economic, global unrest. These are the things that we're talking about. These are the things that the markets seem to be listening to at the moment. But we don't have any threatening weather right now. So soybeans in particular just kind of want to lead the way lower. Corn tried to hold on to unchanged. It's pretty close to unchanged. It was positive earlier, but kind of giving that up as soybeans come under a little bit more pressure. And it's just we're at the time of year where if we don't have some sort of weather story or a bullish demand story, we're creeping into harvest lows. We're getting close to harvest. We've got a lot of old crop that still has to move. And that's starting to, we're continuing to put pressure on the board.
And the big question, can we find buyers at lower prices? Because once you start finding those buyers, you can push the prices back up. That's what we've done with the cattle market. Hang around. We're going to come back and talk live feeder cattle. We'll talk hogs as well with Ted Seifried. Zaner Ag Hedge as Market Day Report continues after this. It's Market Day Report. We started the morning by talking about the export sales report out from the Foreign Ag Service. They give those numbers to us for both export sales and actual exports for row crops, but they also do it for the proteins as well. And for beef, the numbers, well, we're down for both the sales and the exports. However, for hogs, we saw a bump higher. Does that translate into the market? Well, let's go live cattle right now in Chicago. And we trade it 40 lower on the October at 178.87. D's off 32. February 32 lower. Roll out to even April, and we're $0.50 lower at 179. What about the feeders? Yep, we're lower there too. The August off a couple of pennies, but Most active September now at 239.17. It's up 27. Actual numbers on the export sales side down 43% for sales for beef, according to USDA, from the previous week. And the 4-week average is down 27%. And what about hogs? Well, USDA said a 10% increase on sales, 24% increase on that 4-week moving average. It's not spilling over into the markets. October last check, 72.87. It's down $1.70. When I think pork, though, it's easy to think about ribs and barbecue in St. Louis. And Ted, have you had a chance yet to grab some barbecue?
No, not yet. Was at the Broadway Oyster Bar last night. That was a very nice place. Yeah, livestock are just not finding any sort of strength today. And that's a bit disappointing, especially if you say, well, the main reason that we had the break late last week and early this week was triggered by a lot of weakness that we saw in the equity markets. And that's causing concern about domestic demand for higher cuts of higher price cuts of beef. But then you have a day where we're trying to recover a pretty decent amount in the Dow and in the S&P. So that should have us feeling better about domestic demand, but it's just not translating into higher prices. As you said, export sales were fairly lackluster for the cattle complex or for beef. They were all right for pork, but that's not giving us any strength on the board. And then, pork's the really kind of concerning one because we had been hanging up, sort of consolidating near recent highs after the big bounce off of lows. And now we're kind of breaking out to the downside a little bit. So I think this is just a bit of a retracement. I think overall we have put a bit of a bottom into the pork market or into the hogs market. I would like to see it recover a little bit by the end of the day to feel better about that, Tony. But yeah, if we're going to be concerned about the economy, if we're going to be concerned about consumer spending, you would think that pork would be a interesting option for consumers at the butcher's counter. You also think that the lean hog complex would be an interesting trade for a lot of the, recessionary thoughts, a recessionary hedge. Because again, you look for cheaper substitutes to be the winners in times like that. So again, I think there's upside potential for the hogs, but we don't love what we're seeing today.
Absolutely, and I think one thing we can start watching for between now and the holidays: sales on hams. Ted, thanks for coming by, and come back and see us again soon. Ted Seifried, Zaner Ag Hedge.